Okay, I believe we're live. Welcome back, ladies and gentlemen. My name is Larry James. I own a company called Speak with Larry, no spaces. And what my company does is teach you how to set up the foundation of an online business while helping you become more comfortable speaking about it. Now, for the next 90 days, starting March, April, May, I'm going to be creating videos sharing information about the stock market because the stock market is a place that I've become interested in investing some money. So, in order for me to invest my money, I need to invest my time to gain the knowledge about what I actually need to invest in and how to best, you know, create a future for myself financially via the stock market. So, one of the things that I wanted to do since I'm doing that is I wanted to share with you how easy it is for you to implement or duplicate my system that teaches you how to set up the foundation of your online business. Because all you would do is you would select a topic, just like I did, the stock market. You create a system or process that you would gain the knowledge. In other words, your research, right? You got YouTube videos, you got blogs, you got podcasts, you got all type of things you can access to gain different perspective and different knowledge about whatever topic that you want to share content about or create a product because you're going to be creating product. Now, one of the things that I do is at the end of the 30 days, I uh, create an online course via these videos, right? So what you would do is you would be able to go through the whole process for March, right? It's probably going to be about 10 or 12 videos, maybe more. But whatever that is, I do one video on Tuesday, one video on Thursday. So whatever that is for the entire month, that's what it will be. And I may throw a bonus in or something like that. I don't know, just depending on how I feel. But that's the kind of control I have of how I want to do that, right? And you'll have that same type of control. Now, initially, you're not going to be able to talk for long periods of time, probably. Normally you take some, a while for a person to be able to, you know, control the process over a 20, 30, 40-minute period of time. But you're going to be learning that. You're going to be getting better. That's why when you create your first month's videos, you don't want to put a high price point on those. You want to charge something like maybe $5 or $6, I'll say $5 to $7. And then when, like for me, the second month, April, now that's going to be more information, more informative, more detailed, strategic, rather than just definitions and terms, right? So that's going to bring a little bit more value to the process. So for me, I may charge, $27, $29 for that. And then the final month, there's going to be a lot more strategies involved, right? More things that are hands-on that you'll be able to do. So I may charge 49 for that. So at the end of the day, I'll have three products there, and then I'll combine those and charge it and create another product, right? Or create a membership site that will allow me to bring people in specifically to see those videos or other videos that I create that everyone else is not privy to, right? Without paying a fee. There's just so much you can do. And I really want you to think about this, especially if you're a young person. I was talking to a young lady today. She's like 25 and she has like over $50,000 school debt. And she works at a job that pays like 17, maybe $20 an hour. That's going to be hard to pay that back. You're going to need a side hustle. These are ideal for that because you're creating your own products, your own content. The only spin is that it's you. It's not me. It's just like if I take myself out of this seat and put you in here, I'm doing the same thing that you would be doing. Simple as pie, right? And a lot of people didn't realize how easy it is to access that process nowadays. It's inexpensive and it's easy to position yourself where you're the expert on whatever topic that you're talking about, right? Okay, so with that, I'm going to go over some information I'm going to share today about the stock market and Hopefully you have your pen and pad. If you don't, you can just, play it back and catch up. But see, this is all it is just, and plus it's allowing you to become more articulate in what you're doing, right? Because you're becoming more strategic. But the word I wanted to use today, now that we're coming to the last two, this is the last two videos of March, is consistency. See, from March the 2nd until now, if you're not consistent, you don't have those videos in the can like I do. You see what I'm saying? That's absolutely necessary, which also means you're not getting better at what you're doing. You gotta think, right? How do you get better at anything? You practice, you practice, you practice. You gotta put in the work. It's not you add water and get rich. It doesn't work like that. You have to put in the work. And when you don't, that shows. It tells according to, the growth that you will see. It really does. Okay, so the first thing I'm talking about today is an angel investor. What is an angel investor? Well, an angel investor, also known as a private investor or seed investor or angel funder, is a high net worth individual who provides financial backing for small startups or entrepreneurs, typically in exchange for ownership, equity in the company. Often, angel investors are found among any entrepreneur family and friends, right? The funds that the angel investor provides may be a one-time investment to help the business get off the ground, or an ongoing injection to support and carry the company through its difficult early stages, right? That just depends on the agreement that you and the angel investor decide on. The next topic we're going to talk about today is annual percentage rate, APR. I'm sure you've heard that term 100 times. The term annual percentage rate refers to the annual rate of interest charged to borrow and paid to investors. Annual percentage rate is expressed as a percentage that represents the actual yearly cost of funds over the term of a loan or income earned on an investment. Now, this includes any fees or additional costs associated with the transaction, but it does not take compounding into account. The APR provides consumers with a bottom line number they can easily compare with rates from other lenders. So that's what annual percentage rate is. When you hear that term, and you will hear that term in dealing with the stock market, what's annual percentage rate? You'll know how to go back here and play it back and review your notes. Next, we have what is the cost of funds. Remember, these are terms you'll hear in the stock market, but you may not have ever heard them. It's very possible that you've never heard these terms. So what is the cost of funds? The cost of funds is a reference to the interest rate paid by financial institutions for the funds that they use in their business. The cost of funds is one of the most important input costs for a financial institution, since a lower cost will end up generating better returns when the funds are used for short-term and long-term loans to borrowers. Okay? The spread, remember this though, the spread between the cost of funds and the interest rate charged to borrowers represents one of the main sources of profit for many financial institutions. So keep that in mind. All right, next we have compounding. What is compounding? Compounding is the process in which an asset earnings from their capital gains or interest are reinvested to generate additional earnings over time. That's called compounding. Now, this growth, calculated using exponential functions, occurs because the investment will generate earnings from both its initial principal and the accumulated earnings from preceding periods. Compounding, therefore, differs from linear growth, where only the principal earns interest each period. Got it? Next, we have capital gains. Now, these are stock market terms. I know you may have heard capital gains before, but a lot of people, like myself, I wasn't really in that world, so I kind of had an idea of some of these things, but I didn't really know, which is why it's excellent for me to be reviewing these, because now it'll be more, in my DNA. I'll be able to pull it up when I hear it, and I'll know what it means, right? Okay, so capital gains is an increase in a capital asset's value. It is considered to be realized when you sell the asset. Capital gains is activated when you sell the asset. A capital gain may be short-term, 1 year or less, or long-term, more than 1 year, and must be claimed on your income tax. Understanding this distinction is factoring it into investment strategy is particularly important for day traders and others taking advantage of the greater ease of trading in the market online. Now we have capital assets. What is capital assets? Capital assets are significant pieces of property such as homes, cars, investment properties, stocks, bonds, and even collectibles like art. Now, for business, capital asset is an asset with a useful life longer than a year that is not intended for sale in the regular course of the business's operation. This also makes it a type of production cost. For example, if one company buys a computer to use in its office, the computer is a capital asset. If another company buys the same computer to sell, it is considered inventory. Make sense? Told you this was very, very simple stuff, man. I love it. Okay, next we have production cost versus manufacturing cost. An overview of production cost reflects all the expenses associated with a company conducting its business, while manufacturing costs represent only the expenses necessary to make the product. Both of these figures are used to evaluate the total expenses of operating a manufacturing business. The revenue that a company generates must exceed the total expenses before it achieves profitability. Got it? Next, I want to talk about what is an American Depository Receipt, the ADR. An American Depository Receipt is a negotiable certificate issued by a United States depository bank representing a specific number of shares, often one share of a foreign company's stock. The ADR, or American Depository Receipt, on U.S. stock markets is any domestic shares. Let me repeat that. An ADR trades on U.S. stock markets as any domestic shares would. ADRs offer United States investors a way to purchase stock in overseas companies that would not be available otherwise. Foreign firms also benefit as ADRs enable them to attract American investors and capital without the hassle and expense of listing on the U.S. stock exchanges. Got it? I love this type of stuff because you can do it at your own pace. You can do it whenever you schedule it, right? You just make the decision. And it's kind of like you're actually forming your next life. Because just imagine once you start to do this, and let's say over maybe a 12-month or 18-month period, you start to make, let's say, $500 to $1,000 extra a month. That's not a lot of money, right? But if you think about it, where you are right now, if you were doing something that you loved and you were making $1,000 extra a month, it would be easier for you to make $2,000 because you're already making money now. You know the process. You just have to increase what you're doing. right? In other words, you have to work on your marketing, make sure you're getting out in front of people, more people, right? You may not be good at that. And if you're not good at that, you can hire that source. There are people in different countries that do it for almost nothing. If you go to a site called Fiverr, you probably heard of that, Fiverr.com, you can pay for any service you need online, any. And they'll monitor, they'll set it up, they'll monitor whatever you need. Although the caveat to that, in my opinion, is that you need to make certain that you know what you're asking for, though, right? Because see, if you don't know what you're asking for, this is a business. And in the business world, people will take advantage of you. They'll say that you need to pay this, you need to pay that, you need to pay this when you don't, which is why it behooves you to gain that knowledge about what you need to ask for before you put your money on the table. Got it? All right, we're going to continue on. The next term I'm going to talk about is negotiable. What is negotiable? Negotiable is used to describe the price of a good or security that is not firmly established. That kind of makes sense, right? It's not firmly established. It is also used to describe a good or security such as cash, whose ownership is easily transferable from one party to another. In other words, used to describe negotiable are marketable, transferable, or unregistered. Okay, next, understanding negotiable. When you understand negotiable, you often hear the term negotiable used in reference to the purchase price of a particular good or security. The asking price is not set in stone and can be adjusted depending on the circumstances. Most securities are negotiable. They can be easily transferred from one party to the next, provided all proper legal documentation is included. In the world of finance, negotiable refers to a legal document or instrument that is used in lieu of cash. It's used to make a promise of payment, generally cash flow, at some point in the future. In context, the word negotiable implies a cash value that comes with a specific instructions about the timing of cash flow to be paid. The term negotiable is used to suggest the document or instrument comes with the same faith legal backing as cash under the law. That's the definition of understanding negotiable. You had what is negotiable and then understanding negotiable. You can play that back later and listen to it again. Next, we have what is security? The term security refers to a fungible, negotiable financial instrument that holds some type of monetary value. It represents an ownership position in a publicly traded corporation via stock. A creditor relationship with a governmental body or corporation represented by owning that entity's bond or rights to ownership as represented by an option. Now, I said, what is security? The term security refers to a fungible, negotiable financial instrument. So this next definition is what is fungibility? Fungibility is the ability of a good or asset to be interchanged with other individual goods or asset of the same type. Fungible assets simplify the exchange and trade process, as fungibility implies equal value between the assets. Okay, so when you hear that term, it was foreign to me, I had never heard that term. Now I know what it means, right? Next we have, what is a call option? A call option. Call options are financial contracts that give the option buyer the right, but not the obligation to buy a stock, bond, commodity, or other asset or instrument at a specified price within a specified time period. The stock, bond, or commodity is called the underlying asset. A call buyer profits when the underlying asset increases in price. A call option may be contrasted with a put, which gives the holder the right to sell underlying asset at a specific price on or before expiration. Okay. Now I'm going to tell you about a put option. The first one was a call option. Now we have a put option. A put option is a contract giving the owner the right, but not the obligation, to sell or sell short a specified amount of an underlying security at a predetermined price within a specified time frame. This predetermined price that buyer of the put option can sell at is called the strike price. Put options are traded on various underlying assets, including stocks, currencies, bonds, commodities, futures, and indexes. A put option can be contrasted with a call option, which gives the holder the right to buy the underlying at a specific price, either on or before the expiration date of the options contract. Now, you just heard me mention strike price. What is a strike price? A strike price is a strike price is the set price at which a derivative contract can be bought or sold when it is exercised. For a call option, the strike price is where the security can be bought by the option holder. For put options, the strike price is the price at which the security can be sold. Now, these are going to be a little confusing in the beginning, I know, because they were for me. But a strike price is also known as the exercise price. So what is the exercise price? The exercise price is the price at which an underlying security can be purchased or sold when trading a call or put option, respectively. It is also referred to as the strike price and is known when an investor initiates the trade. An option gets its value from the difference between the fixed exercise price and the market price of the underlying security. How cool is that, right? That was very, very interesting and informative today. I really appreciate you guys stopping by and, checking out my process here today. Now, I wanted to re-emphasize that word consistent with you guys today. If you're not consistent, you can't be successful. Success is not based on things you do every now and then. It's based on things you do continually, regularly, every day. You have to kind of eat, sleep, and drink success, or I should say your way to success, because you got to be absorbed in it. You got to have people around you say, that's all you talk about. You're always this. You don't ever have time for that anymore, right? You need to hear that, because if you hear that, then you're on the right track, because what you're doing will pull you away from the people that are not in line with what you're trying to get accomplished. So you're trying to position yourself for the next level of life for you. That may be 5, 10, 15 years down the road. But if you start today, 5, 10, 15 years down the road, you won't have financial problems. You may have other problems, because we all have problems. We have situations that just, boom, pop up, right? That's okay. That's called life. But the financial part, you can actually control that to a certain degree by gaining knowledge about how to invest your money, how to budget your money, how to teach people things so you can create products that you can sell. And you need to always be in thought of creating. You just like we were created, we also have the ability to create the life we live. In all actuality, we all do create the life we live, but only the successful will admit it. Everybody else blaming on something else, right? But it's not something else. It's you and your choices and your commitments and your stick-to-itiveness. If you don't have the ability to stick to something, it's going to be difficult for you to actually make the change in your life that's going to allow you to grow on the level that you need to in order to see the success that's available to us all. But it's possible. It's very possible and it's doable. And you can do it. You just have to follow people like myself for a little while, and I'll guide you to somebody else. And then you follow them for a little while, and they'll guide you to somebody else. And then once you're creating that content, someone will see it. And they'll say, hey, call that guy named Larry James. I want to talk to him. I got a proposition for him. There's an opportunity, right? You just never know who's watching or how life is going to bring someone into your path that's going to allow you to elevate to the next level. But you need to be ready, which is why I recommend you focus another process on remaining humble as possible, because money, fame, those type of things has a tendency of, throwing you off track, because now you're getting caught up in that, right? Rather than what you're actually doing, and then there's other things that will, pull you away from that. So just remain in control of you. You can't really control the external, but you can control how you react to it, right? And again, one of my favorite topics is personal development. And I always speak on personal development at different venues. So I like to share information about that whenever I get the opportunity. Now, closing out this segment, remember, you can contact me at larry5969@sbcglobal.net. And if you'd like to, join me here and have a conversation, how we do on Zoom, I can just pull you up, and I as I'm reading, I can say, do you understand that? Do you get that? What part of that do you not understand? And then, see, that will start to happen on the next series of videos. But see, the beautiful thing about that is if it doesn't, that's okay. Because see, it's not about that. It's about you learning what you're sharing so that you can be the go-to person in that field, right? Those are just little caveats, little edifications of, sharing the time that you have with someone else, because you will be, when someone comes on your Zoom interview, you will be getting to know that person, right? That's how that works. And you don't know what that person can bring to your, benefit, or what you can bring to that person's benefit, because we're all trying to get someplace, right? If you're solving a problem for me and I can solve a problem for you, we should do that, right? For a fee, of course, absolutely. I'm this is a for-profit entity, but you don't do everything for profit. Sometimes you can be, do some charity work, and I recommend that. And I do that. I appreciate you guys for doing that as well. Anyway, with that being said, remember, my name is Larry James. My company is Speak with Larry, no spaces. And as always, share with someone else what I've shared with you.